Welcome into the Multifamily Investor Playbook. We have another special guest today, and we're so excited. John Lee is the founder and principal at AG Truitt Law Professional Corporation, a firm focused on providing legal services to participants in the asset management industry. Now, John has like a decade of transactional and regulatory experience at some of the most prestigious law firms on Bay Street, and he brings a sharp and practical approach to solving his clients' complex legal matters. Now, John, you've been really representing us from day. Well, I say from day one. I remember what happened. Actually, we were working with another firm, and you were working with the exempt market dealer,
That's
and
right.
you kind of shredded the first lawyer's documents, in a good way. Like you're like, there's some challenges here, but we liked you so much in your approach, and not that you're a keen legal eye, but just the way you would explain things, we easy to understand. We knew what we needed to do, and so what ended up happening for those listeners is, you said, we just want to hire this guy, you know. And so we've been working with you, really, I guess, from deal two onwards, and
Right.
it's just been such a great relationship. You make things easy while making sure our investors are well protected, and everything is like looked after. But I have to ask, I did notice something on your website there. You talked a lot about, loving and reading a lot of the great American novels. So, tell me about that. What drives you to, those types of books?
Yeah, for sure. And John, I just want to say thank you for the kind words and also for inviting me on the podcast. I'm really excited to be here. I'm excited to share more about the legal aspects of the asset management industry with your listeners. So really happy to be here. In terms of great American novels, it's true. So as a Canadian, I'm very fond of U.S. literature, and so as a child, I would say it was Johnny Tremain. And
Mm.
as an adult, it's a river runs through it. I mean,
Ah,
two very different books, but a river runs through. I read it. I would say about 2 or 3 years ago now, and it just really the theme of loving somebody even if you don't truly know them is just fantastic. And I find that theme just it cuts across friendships, it cuts across family, and just one of those timeless pieces that I can always go back to.
oh, you know what, man? It's you actually kind of like really not necessarily blew my mind, but that's a book that's been on my mind, but I have not yet read. So I just finished a book, and so I think I'm going to run to Barnes and Nobles after we finish recording this and scoop that one up. On my side, I've been working through the Pulitzer Prize winners for fiction, and about a third, a little more than a third of the way through. I mean, they've given it away since the 1920s. There's a few years they didn't award it, and then there's a couple years where two won. And so I'm slowly making progress, but I found it to be very rewarding. And what's so cool about it is all the Pulitzer Prize stories, except for like a handful, are about the American experience. And so it's anything under the sun, right? So for me, it's really helped me, in a sense, develop a stronger sense of empathy for people that have lived different lives than I've lived. Whether it could be a story about, there was one I read called the Night Manager about and it was actually sort of loosely based on the author's father, but he was a security guard at an Indian reservation, and the government, this was like in the 40s, were changing some laws and rules. And he decided to get politically active and get involved and try to make a difference in his community. And it's like, how else could I have learned about that experience except for that kind of, thing, right? And I tell a
Yeah,
lot of people, who read a lot of business books that like don't miss out on reading really good literature. You can learn a lot
yeah.
about human behavior, and just, once again, immerse yourself in different people's lived experiences. Really great fiction tells sometimes a better truth in my mind than, nonfiction can.
Oh, yeah, I'm
Um,
totally with you on that. Yeah,
yeah,
absolutely. It's one of the reasons why, I love reading biographies as well too. And again,
yeah.
American based. I like John Adams. I like George Washington. And so, I know it's a testy time between Canada and the States right now. But I will say this: I believe firmly in the friendship between Canada and the U.S. And I'm still on that train.
I always say it, this is not a political podcast, but sometimes we have to wade into these waters, right? The way the Iran war is going to impact interest rates and potentially building materials costs. We have to talk about these things. But let's just say I'm not very happy with how the current administration has treated Canada. I mean, you guys have been with us along the way, almost in every major conflict. I mean, even down to the Iran, where you guys were, helping keep Americans safe in the embassy for a year plus, right? It's I can't remember who said this, but they said, you know how you know somebody's truly a friend is will they hide you when something is going on. It was post World War
Right.
II and the Holocaust, and the Canadians took that risk and took that step and put their lives on the line. And obviously, certain conflicts that I could probably debate about whether we should have been in to begin with, but Canada's always been beside us. So I have no doubt that that feeling is there amongst a lot of Canadians. I know it's there amongst the people in the U.S. and I think as the political winds change in the future, we'll get back to that strong relationship we've always had. So I'm right alongside you there. But let's dive in a little bit, John. So, I'd love to hear a little bit about your background and how you sort of found yourself in the securities, sort of asset management space, and what led you there.
Yeah, absolutely. So I started off my career on Bay Street, and for our listeners who aren't familiar with Bay Street, that would be the Canadian equivalent to Wall Street.
Hmm.
I started my legal career having articled, and that's like the legal equivalent of an internship. Having
Yes.
articled and started off as an associate at a large law firm downtown Toronto, and I spent about, I would say, close to about 9 years on Bay Street across a few firms, just firmly developing my skills in asset management. I landed into the space pretty much right after I graduated. Uh, didn't really know too much about the space at all, but just started to learn. Found out that I really enjoyed it. And so, for our listeners, when it comes to asset management, that industry encompasses anything that involves capital raising for some kind of asset. And so, a lot of what I did was forming funds. I formed ETFs. I formed mutual funds. I formed limited partnerships. Um, I formed all kinds of trusts where those vehicles would invest in some kind of underlying asset. And so, did that for the better half of or close to 10 years, then decided, you know what? I think it's time for me to just step out on my own and do something a little different. I'd love to be my own boss. I'm gonna try doing that. And so I came out on my own, set up AG Truitt. A lot of people ask me, where did you get this name from? Well, A stands for Asher, it's the middle name of my oldest son. G stands for Grover, my cat, and Truitt is the middle name of my son. And so I figured, my two sons and my cat are really, next to my wife, the people that I love the most. And so I'm going to name my law firm after them.
I love that. It's funny. I never asked the question. I knew you were the principal and the founder, but I think in my brain, I was like, well, maybe he acquired somebody else's practice because it just sounds like a legal name. It has that
Yeah.
like kind of prestigious legal name sound to it, right?
Yeah, you
But
know
I
what?
love that.
I try to be a little irreverent by inserting my cat into it, just because the legal industry is a little stodgy,
Yeah.
and I had to have a little bit of humor about it. So AG Truitt, that's the name of our little firm.
Well, and a fun fact for the listeners too, John is an entrepreneur, right? You just heard that he wanted to be his own boss. You've actually written a children's book on entrepreneurship, and I bought it, and it's fantastic. So you'll have to look that up if you're listening here. If you've got young ones at home and you want to start instilling that, sort of idea of entrepreneurship into them, it's a fantastic read. So, um, how have you seen demand from Canadian investors, sort of investing in U.S. real estate, evolve over the past 5 or so years?
Yeah. So John, I think there's two trends here that are worth exploring. I think the first is that I would say Canadian appetite for U.S. real estate it's just generally remained strong for some time now. Last year, 2025, Canadians represented the single largest class of non-U.S. real estate buyers. So the appetite for U.S. real estate is there; it's holding steady. I think the second trend that may be of interest is that from a securities perspective, Canadian interest in alternative assets has been on the rise for some time. So
Mm.
investors, they're not just looking to buy an ETF or a mutual fund. There's a lot of interest in alts. And so that's why you're seeing an uptick in wealth advisors placing their clients into potentially higher yield products. And so that involves private equity, that includes private credit, and totally private real estate in the US and even other locations.
Yeah, a lot of our investors are it's interesting that the evolution seems to be private credit, and then they start, at least in our world, they're starting to look at like what we're doing, these apartment syndication opportunities. Um, so that's fascinating. I mean, a lot of this is brand new, right? I mean, I think about in the US, like what we're doing at Ferris Capital Partners really couldn't be done until like 2012, and so it's
Right.
always evolving. And so I think Canada was even a few years after that, right? So it is still relatively new, some of these alternative ways to invest. So um, from that standpoint, if you're in Canada, right, like what does cross border, investing or investing in a cross border syndication, like what makes it more complex than just sort of like a domestic Canadian investment?
Yeah. So a cross-border deal involves two layers of legal systems. You have to deal with the American side and you have to deal with the Canadian side. Not only that, you have to deal with the multiple different discipline perspectives as well too. You have corporate law, you have partnership law, you have securities law, you have two different tax regimes as well too. So there's a lot of moving parts. So let's say there's a deal to invest in and buy and flip in Arizona with an intention to raise capital from Canadian investors. So on this kind of deal, the sponsor has to deal with the US side, which would involve the actual real estate purchase transaction, structuring the US investment vehicle to hold the property, and then you have to structure the Canadian vehicle to invest in the underlying US vehicle. And then you have to ensure that the two-tiered structure is compliant from both a US and Canadian securities law perspective, and also ensure that it works from a tax perspective. So there's a lot of moving parts associated with it.
That's right. Yeah, and if not done correctly, right, it can really lead to some challenges, particularly for the Canadian, investor, right? Whether that's dual
Right.
taxation or things like that, which, we're not getting into taxes on this talk. That is a totally different field of expertise and area of expertise, but John does help us along with many other experts to ensure that we do structure our deals the right way, right? So I know you're an integral part of that. Um, Now, it's interesting as for example, John, we have a weekly newsletter we send out, and we're always surveying our investors. And we got some feedback that we can maybe make it a little more in plain English, right? And like sometimes when you're in an industry, right, you get used to these terms of art, and we're just throwing things around like NOI and IRR and cap rates and so it was really good feedback. So not to say we've dumbed it down, but we've kind of taken a step back and say, okay, let's like not use acronyms, like let's define what things are. And we actually now have what we call a plain English section where it's like, this is what this really kind of means. So for example, sometimes an investors hear like the term a security offering, but might not fully
Right.
understand it. So what makes an apartment syndication a security?
Yeah, it's a great question. It's funny whenever I tell people that I'm a securities lawyer, invariably I get folks asking me, "Oh, so what kind of security are
Like
you in?
risk or
Are you yeah
something. Yeah,
yeah,
right.
or are you in national security?" Right.
Yeah.
So it's
I didn't think of
absolutely
that.
very different.
You're working for the intelligence agency, John?
Yeah, are you yeah, like in Canada, it's called CSIS. You work for CSIS?
Yeah, yeah.
Yeah, no. So on a very stripped down level, like I would say a security Canadian law is it's really broadly defined, but it's essentially any kind of document that shows or indicates that you have an interest in an asset, right? So
Yeah.
let's say a developer wants to, or let's use the apartment complex example. Like let's say the developer wants to acquire the complex for the purpose of developing it, flipping it, wants to onboard some investors. And the reason why we would refer to this project as a securities offering is that the developer likely isn't providing every investor a direct fractional interest in the land itself. Instead, what he would do is he would set up the investment vehicle, usually a limited partnership, and each investor's interest in that limited partnership would be considered a security. And so, in
Mm.
presenting the investment opportunity to prospective investors, the sponsor is actually offering these securities for sale.
Yeah. It's like you're buying stock in a business is really what's happening. I mean, to put it in simple
Exactly.
terms, right? Yeah,
Yeah.
that's right.
Exactly. Exactly.
That's it. So, what are some risks that investors face if the deal is not structured properly from a security standpoint?
Yeah. So I would say the big risks are number one, the investor might not receive proper disclosure. And so they might not know what they're getting themselves into. I would say that number two is uh, uh, on a deal that isn't structured compliantly with securities law, sometimes we see folks who are selling the securities who are not legally permitted to do so, right? And we could talk a little bit about this, but in Canada, in the exempt market, there's a level of registration category called the exempt market dealer. And these are the folks that are legally permitted to sell securities to folks in the exempt market. And I would say number three, the investor qualification may have been handled incorrectly, and so there have been times that I've seen, sponsors, uh, what they've done is they haven't actually collected all the requisite information that they needed to determine
Yeah.
whether or not the investor can actually buy those securities. And so in those situations, like sometimes they actually have to redeem out those investors. They just couldn't stay in the product anymore. And I would say, fourth, like the legal rights around the investment can become pretty messy if the offering was offside from the start.
Yeah, that's right.
Yeah.
Yeah, I mean, it's if you have not yet invested in one of these deals, I mean, these documents could be 100 plus pages long, right? Getting into all the risks, everything. And so we always tell our investors, like, it might not be the most fun afternoon you'll spend, but read it, take
Right.
the time to read the
Absolutely.
document. Yeah. Yeah.
Yeah. Yeah.
And,
It's not necessarily a Pulitzer Prize winner, but you know,
yeah.
probably still required reading.
Yeah, yeah, yeah. I wouldn't be surprised to learn that people are throwing it into ChatGPT and telling me like, too long, didn't read. What do I need
Yeah.
to know?
Yeah. Yeah. Exactly.
Yeah.
Exactly.
But it's one of those things where, at least in our world, unless something changes in the securities rules that requires an update, our documents don't largely change between investments. So, you still want to look through them, but that first read through just to really understand what are the risks here? What are the questions I need to ask? As somebody who works with our investors, Mark Ferris is kind of the tip of the spear, but when we have investors not asking a lot of questions, it's actually makes us nervous. Like, in other
Right.
words, like you need to do your due diligence. You need to ask the right questions. You need to make sure it works for you. Right. So, once again, we're not giving financial or tax advice here, but at the same time, if you're thinking about diversification, what they're looking for, this exempt market dealer process, to your point, is sort of like the eligibility, right? Which there are some
Yeah.
income or net worth or liquidity requirements that you have to meet one of those requirements at minimum. But, there's concentration risk they look at. So if somebody's overweighted in a particular asset class, like that could be, a reason the exempt market dealer might not approve you. And you and I can get into a debate around should the government be telling me what I can and can't invest in, but there is theory and thought behind it because, what could happen if there's a major downturn in a certain industry and you're just way overexposed there. So it is done with the best interest of the investor in mind. And I'm not going to name the name, but there's a big company that I recently read an article on that is in some pretty major hot water, and it looks like they might be going out of business because it turns out they were selling securities without the exempt market dealer. Well, it was interesting when they got it. I guess that sort of like raised a flag, and they went back and looked and realized for like 5 years they didn't have it.
Right.
And so, if you're working with us, obviously ask these questions. But if you're talking to another operator, make sure they're doing things the right and proper way and working through an exempt market dealer because, your investment dollars could be put at even more risk, if things aren't done correctly here. Right. So very cool. So, um, what are maybe an example or two where you've seen improper compliance where it has caused issues for investors?
Yeah. So, more often than not, the issue isn't even outright fraud. It's just poor process. So, yeah, I mentioned earlier that I've seen sponsors that didn't collect KYC information from their investors, so they didn't qualify for to actually purchase the product, and so they had to be redeemed out. So I've seen that before. I've seen like the example that you use. I've seen sponsors go to market, raise a whole whack of money from investors without using a registered dealer, which in their circumstances was actually required. And you have investors coming back and, once they're disgruntled with the product, they're going to start looking for reasons why they should be eligible to rescind their agreement with the sponsor, right? And so all that none of that is good for anybody, right? And so my point on this is like when compliance is treated casually, like investors can end up in deals that were never properly vetted or properly sold. That can lead to pain points for both sides.
Yeah. No, absolutely. This is not something that you just jump into, right, as an investor. You really want to, study the deal deck and formulate a set of questions and just, really confirm the elements of the business plan. What was the thinking behind the acquisition, and kind of like, you might not be getting into per door costs and all these like granular items, but like really prove out. And I will say, at least from what I've seen, and I can say that, and this is, obviously a biased opinion, but like Mark and I went out and hired people with 20 plus years experience in asset management, 20 plus years experience in acquisition. So we surrounded ourselves with people. So it really does boil down to the team. And so what I tell people is that when you're investing in an apartment building like we do at Ferris Capital, it's basically a business buying a business. So do you believe that that team can effectively run that business in this context, an apartment building? But are they putting systems and process in place? As somebody who acquires buildings, John, I see so often where, you can't really necessarily prove it, but you get the sense the operator bought the deal and probably didn't step foot on it again for 4 more years. And, just deferred maintenance and, trash all over the grounds and, problematic tenants and residents. And so, we take it very seriously and we run it as like it's just like the business. In fact, our view is the resident is actually our customer, the investors, the shareholder, and
Right.
so
Right.
we think about shareholder value quite a bit, obviously, but
Yeah.
if we don't take great care of the residents, and so it is not just the numbers on a spreadsheet or in a pitch deck. It's the team behind the deal and your sort of faith that they can operate the deal effectively as advertised, right? Because one thing we all know is everybody has a plan until they get punched in the face. So, what happens if there's something that happens in that market or there's a major storm? Do they have proper insurance? John, we had a friend who owned a deal in Florida and went for cut rate insurance and learned after a hurricane that their policy specifically did not cover named storms. Well, what's a
Oh
hurricane? It's a
man. Oh
named
my.
storm. And so a couple million
Right.
dollars in new roofs coming right out of the
Right.
proceeds, right? Not from insurance. And so, getting in depth on like what is the insurance? What does it all cover? Is there loss of income? Like it goes back to we like those questions because it shows that we're aligning ourselves with people that are like us that are checking the right boxes and asking those questions. And so yeah, it's nothing to just step into. You really want to do your due diligence and ask a lot of questions. Now um we talked a little bit about this, but can you explain the role of that Canadian limited partnership feeder fund structure?
Yeah, absolutely. So a Canadian limited partnership feeder is essentially an investment vehicle that pools Canadian investors and they invest downstream into the US deal. So instead of every Canadian investor subscribing directly into the US vehicle, they subscribe into the Canadian feeder. And the feeder, the Canadian LP feeder, becomes the investor into the US vehicle. Now, this is a pretty preferable structure because it simplifies a lot of things. Canadian offering mechanics, investor onboarding, administration, tax reporting, and sometimes even the economics of dealing with multiple Canadian investors. And so what it does is it creates a clean legal package for Canadian investors because the feeder can be tailored to Canadian securities and tax realities as well too. And not to mention Canadian investors tend to be more comfortable with a structure that they understand, which would be a Canadian limited partnership. It's not a great marketing move if you take what I would like, a European C cap and plop it in front of a Canadian investor. They'll more often than not say, "Well, what is this? I've never heard of this kind of structure before." And so, you want to be able to use, even from a purely, even if we're stripping away all the legalities, you want to use a structure that makes that is clean and very what's the word I'm looking for? Canadians are familiar,
Yeah,
with
that's
this.
right.
Yeah, yeah,
Yeah, it's a structure
yeah,
that, yeah, they've seen
yeah,
before. No,
yeah,
100%. So if an investor is saying, "Yes, I'm in," they've met with the exempt market dealer, perhaps they've gone through that KYC, which if you're listening and aren't familiar with that acronym, that's know your client. So that's basically where the registered dealer is just confirming that the investor is eligible to invest. So what are some of the key legal documents that investors going to receive at that time, before they send in their funds, right? They need to sign the documents first and read them. What are the typical legal documents they're going to receive?
yeah. So the core package usually includes the offering memorandum, the subscription agreement, and the limited partnership agreement. If the vehicle is a limited partnership, if it's a trust, you'll see either a trust agreement or a declaration of trust, and any marketing materials as well too. So usually there'll be a slide deck that just summarizes the merits of the deal. So if this is a cross-border offering with a Canadian on US stacked LP structure, like we were talking about before, you should see the offering and governing documents of the US vehicle as well too. That would I would say would be the gold standard package.
Yeah. And that's, you've helped us do that, right? But that's what we're providing our investors, like, that
Yeah.
kind of gold standard approach. So, maybe with the offering memorandum and the securities agreement, what are some things that they're going to find in those documents?
Yeah. So the offering memorandum, I call that the primary disclosure document. It sets out all of the details of the deal, and so that's the document where investors learn about all the material details of the offering. What's the product? What's the asset that the vehicle is investing in? Who are the key people in management? How does the money move? What are the fees? What are the conflicts, if there are any? What are the key assumptions? What are the risks? So, under and maybe we could talk about this a little later, but in the exempt market, in some situations, a sponsor might not even need to issue an offering memorandum, but it's smart that they do. Yeah, they usually do because investors want to be able to read something about their target investment. Like my wife reads all the nutritional details on everything that she buys from the grocery store, and the same line of logic. if you're entering into a large investment, you're sinking in hundreds of thousands of dollars sometimes. You want to know just exactly what you're getting yourself into, and the offering memorandum provides those details.
That's right. And within that offering memorandum, there is that risk section. So, what are some things an investor is going to specifically look for in that risk section?
Yeah. So if I was an investor, I'd focus on three main points. Now there's more, but I'll focus on three. Number one is sponsor risk. And John, we talked about this earlier. Who's the sponsor? What's their track record? Obviously their history isn't going to be completely relied on because historical performance is no guarantee. It's no indication of future performance. But the success of the deal is likely going to be tied to the abilities of the sponsor. So you need to get comfortable with the people who are managing your project. uh, I would say the second point would be liquidity. How long is your money tied up? Are there any redemption or repurchase mechanics? If I want to take my money out, is there a mechanism to do that? What I would also say is that when it comes to alternative assets like real estate, you should expect your money to be tied up for some time, given that the underlying asset is it's generally illiquid, right? So you got to get comfortable with the idea of illiquidity. Otherwise, that investment's probably not for you.
That's right.
I would say number three, conflicts and fees. Do you know how you're going to get paid? Do you know
Hmm.
when you're going to get paid? Do you know how much the sponsor will make? Do they get paid before you at the same time? You want to figure those things out. So I would say
That's
those
right.
3 points are pretty important.
That's right. And so, in the sub document, the subscription agreement, what are they looking for in there?
Yeah, yeah. So in the subscription agreement, investors generally treat it like a formality, but it's actually a document where they're as the investor, they're making legal representations, right? And so they're often saying that it's in the sub agreement where they certify that they're an accredited investor, which allows them to buy the product. They're certifying that they understand risks, that they can bear the loss, and that they're buying for investment purposes. So the sub agreements where legal accountability becomes very concrete.
Yeah. So in a sense, the offering memorandum's like about the offerer, the operator, and the subscription agreement is in a sense about the investor, if that makes
That's
sense,
right.
right? Would that
That's
be kind of a
exactly it.
fair way to say it?
That's right.
Um, and so kind of shifting gears a little bit, are Canadian regulators sort of like paying more attention to cross-border real estate offerings today than maybe they have in the past?
Yeah, I would say more broadly, they're just generally paying more attention to the exempt market, uh, and so I would say not specifically to cross border offerings, but to generally to the exempt market, and the reason for that is the securities laws. It's a framework that's meant to protect investors, and with the rise of interest in alternative investors, you see more and more that the regulators are trying to keep up with that kind of demand, like keeping a close eye on dealer conduct, like keeping an eye on disclosure quality, keeping an eye on investor protection. And so the message from regulators has been pretty consistent. Just because you're exempt doesn't mean you're unregulated. So they're staying pretty close to to the process.
Makes sense. And, I suspect whenever there's anything new and even in, when it's, 100 years old, there's bad actors, right? And there are people out there that just don't always follow the rules. And, I think it's interesting actually when I see what goes in on the Canadian side as compared to the US side. I think we're actually missing some of that down in the US. In other words, there was a group out of Texas, it made like the Wall Street Journal a couple of years ago. And basically this person was, it was a company, but one guy at the top was acquiring these buildings and taking these big upfront fees. And, the market shifted, right? And so, all of a sudden investors aren't getting any sort of distributions and they start asking questions. And I know that there's lawsuits flying around. It's been a couple of years, so I'm sure it's still working its way through the court system. But in the Wall Street Journal article, they actually sent reporters to some of the properties that this company owned, and there was no property manager anywhere to be found. Like nobody was even at the property level, like trying to lease these buildings up. It was just closed. And so, I mean, that's an extreme example, but those examples do exist. And so, for me, having come from residential real estate, where in the US, it's every state has different rules and laws. Like I was one of the voices saying we should make it harder to get a real estate license and we should make it more punishing when you screw up, because
Yeah.
I had examples where, another broker just completely misrepresented something in the property and you take it to the commission. They go, well, it seems like an honest mistake. I'm like, I got an email where it showed they knew there was a foundation issue and they didn't disclose it. What do you
Oh
mean?
boy.
And
Yeah.
so it's just
Absolutely.
frustrating when you're trying to do the right thing, right? And others are out there
Yeah.
not doing the right thing. So would you
Yeah.
say that compliance requirements have tightened even more so in recent years?
Yeah, I would say so. The most obvious example there is that among all the regulators in Canada, they came together, just because securities regulation is asymmetrical. Every province and territory is run by its own, is governed by its own, or should I say, overseen by its own regulator. But the joint action culmination was what we call the client focused reforms, where there were, from a legal perspective, there's just a lot more scrutiny on conflicts, a lot more obligations or heightened obligations placed on exempt market dealers to know your product, to know your client, and to do proper suitability. And so, that affects EMDs, and indirectly it affects sponsors that are using those EMD distribution channels. So I would say even where the underlying legal exemption didn't disappear, you have expectations around process, evidence, diligence, and investor treatment. These are all becoming more exacting.
Yeah, that's right. And I would expect that you'll see just more oversight going forward, right? I don't think you're going to see it pull back at all,
Yeah.
in a good way. Once again, I think that it's still new. And in a sense, like, we're seeing in the US where, and I will say this administration, and once again, without getting the politics, I mean, Trump's a real estate guy. So, in that big, beautiful bill, there were quite a few things that were very advantageous to real estate owners and operators. And so, it's not an environment where I expect to see operators getting more scrutiny. But interestingly enough, in the single family space, there was a lot of institutional, like private equity groups that were snapping up single family homes for rental, and it's passed the Senate, but not yet the House, where they're saying you can't do that anymore. The interesting thing is it's always that problem where politicians don't always understand what they're making laws about, and so there was a provision in there that said if you say, for example, did a build for rent single family community, right? So, this is a very big trend in the US right now where you literally build like 200 single family homes, but the purpose is to rent them, not to sell them. And so the law says you have to sell within 7 years. But the reality is they're not going and getting 200 different loans. They're getting one loan for the whole project. And so you can't just
Mm,
sell one of the homes. Otherwise, and so it just
right.
goes back to, I'm sure that the House will look at this stuff, but that's an area where, because I can tell you that less than 1% of single family rentals in the United States are owned by these groups, but the optics politically, Blackstone owning 150,000 homes in the United States just doesn't play well on social media. So I think it was one of those that just, hey, we'll throw them a bone, kind of make them feel better. But our housing challenges in the US, and really not unlike Canada, are really systemic and not something that are going to be easily solved. So it'll be interesting to see how kind of things develop over the coming years. But John, this has been absolutely wonderful. I know we were sort of joking before we were recording that sometimes legal and insurance doesn't seem like the most exciting, but a lot of our investors are relatively new to these alternative investments. So I think you provided a lot of value and a lot of things for them to think about. So really, number one, appreciate your time today, but more importantly, I just appreciate the partnership. You've been a fantastic ally. Working alongside you has been a pleasure. And so if you're listening to this and you're an operator and you're in Canada, give John a call. He'll take great care of you. And John, we'll put your website and all that in the show notes here so people can find you easy. So anything else on your mind before we wrap up?
John, I just want to say I appreciate all those very kind words, and I want to also reiterate it's a pleasure working with you and Mark and Madison and the whole team at Ferris Capital Partners. I think you guys do great work, and I'm really privileged to be part of that process of supporting you guys. Otherwise, I would say, for all the listeners out there, there's a lot of great information about Canadian investments into U.S. multifamilies out there, also on the Ferris Capital website too. And so do go ahead and check those things out, and don't be afraid to give me a call too if you guys have any questions about legal issues regarding investments.
That's great. Well, thank you so much for listening. If you'd like to learn more about what we do at Ferris Capital Partners, go to fulloutinvesting.com. You'll find a sample deal deck on there, a video explaining our 10-step process from acquisition to exit. And you can book a time to talk with Mark or myself if you'd like to talk about investing or just learn more about what we're up to. Thank you so much for listening. If you did enjoy this, please like and subscribe and share with another high net worth investor you think can benefit from it. We love and believe in you. Keep investing and dreaming big.